Good afternoon. We're waiting on the FOMC announcement. Right now, that Dow is up 43, the Nasdaq 100 is up 14, Nasdaq Composite's up 18, S&P is up 812. Going into the Bernanke release here in about 5 minutes. I'll put this on pause for the MMTs. We have this all recorded right here as to where the indexes are. They've already pulled back. T-bond is plus 40 cents. We're going to see what this knee-jerk reaction brings. We just want to get this recorded for the new people that are in the trading group, is that there's going to be some knee jerk, and they ran these things all the way up to multi-highs again going into this announcement. Sell the rumor. They voted 11-1 to maintain buying $85 billion a month in policy. There isn't much of a knee jerk until we get more of it. There'll be a 30-minute conference from now about it. We're going to watch and see exactly what happens on this headline. That means they're going to keep that stimulus in there. As we can see that there has been some statements, I'm going to have to cover it. There was a little knee jerk. We're still right about at that flat line. It appears that the FOMC statement update, moderate economic growth following a pause late last year. Labor market conditions have shown signs of improvement in recent months, but the unemployment rate remains elevated, and it will for a number of years, no matter what they do. The committee decided to continue purchasing additional agency mortgage-backed securities at a pace of $40 billion per month. The inflation is below the 2%. We'll have more of an update as we go through this. We can see that equities are coming off of the bottoms across the board. Economic recovery strengthens. In particular, the committee decided to keep the target the same. So basically, it remains unchanged. So I'm going to go ahead and start buying a contract down here, Pierce, on that Google 810 call. One of the things that I'm going to have to do is go through this much more in detail when we have the time in one of our training sessions as to what the statements are, to what they really mean and whatnot. In determining how long to maintain a highly accommodative stance of monetary policy, the committee will also consider other information, including additional measures of labor market conditions, indicators of inflation pressures and inflation expectations, and readings of the financial development. There's going to be a lot of controversy over it. We can see that we're down here at 39 plus. We can see that stocks are not getting a high volatility reading off of this announcement, but there will be a conference that starts at 11:30 p.m. Pacific Standard Time, my time. And how much of this is going to be political or non-political, we will give you the full coverage live here. Taken together, these actions should maintain downward pressure on longer-term interest rates, support mortgage markets, and help make our broader financial conditions more accommodative. That is a thing of stimuluses. That's not what these markets need. And let me tell you one thing. It's all artificial. It's all stimulated by them. All it's going to do is create a bubble moving many months down or into next year. But there will be a price to pay. There at some point, at some time, our long rates will go higher. We'll update this report, but this is the knee-jerk reaction. There isn't much of one, and we'll wait till we do the conference. FOMC meeting update.